Welcome to Learning Unit 11, where we are covering non-current assets, specifically property, plant, and equipment. Our aim for this session is that you should be able to calculate the cost of PPE, account and apply various methods of calculating depreciation, prepare the PPE note, and account for both the acquisition and derecognition of these assets. PPE is a non-current asset, and the conceptual framework defines an asset as a present economic resource controlled by the entity as a result of past events. International Accounting Standards number 16 defines PPE as tangible assets that A are held for use in production or supply of goods or services, for rental to others, or for administrative purposes, and are expected to be used during more than one period. Non-current assets are assets to be used for more than one period to generate income. So we are saying we're expecting to use them for more than 12 months. These are the types of non-current assets. We have tangible assets that have physical form, such as property, land and buildings, plant, machinery, equipment, motor vehicles. We also have intangible assets which do not have physical form, such as goodwill, computer software, patents, trademarks, copyrights. And then we also have financial assets, which are investments and monetary assets, such as long term investments, bonds, or shares in other companies. Initially, assets are recognized at cost. The cost includes the cost price on the invoice plus all direct costs to bring the assets to a working condition for intended use. And then we also have expenses such as repairs and maintenance. These regular servicing costs are expensed in the period incurred on the income statement. So we are saying these are not capitalized. Improvements, enhancements that extend the useful life or increase the capacity are capitalized to the asset's value on the balance sheet. So we are saying that initially an asset is recognized at the cost price, and then all the other expenses that are incurred, we have to determine if it's regular maintenance, we expense. But if it's improvement, we have to capitalize the amounts. The concept of depreciation. Depreciation is the systematic allocation of the asset's depreciable amount over its useful life, matching the cost of the assets to the period in which it generates revenue. What is the depreciable amount? The depreciable amount is the cost minus the residual value, and the residual value is the estimated amount recoverable at the asset's end of its useful life. What are the purposes of depreciation? Depreciation ensures fair representation of the financial statements by matching expenses with revenue, reflecting the consumption of economic benefits, and allocating costs systematically. So depreciation will begin when the asset is ready for use, not necessarily when it's put into use. So we are saying that if the asset is ready for use in May, but we start using it in July, we start depreciating the asset in May.